What if I told you that you can buy any stock for $1? Say you want to buy Tesla for $1. You got it. How about Amazon? Now that will be $1. While we're at it, let's get some Alphabet as well. That will be $1. What's up guys, my name is Naam. So here I talk about personal finance. If you're new here, make sure you click that subscribe button so you don't miss out on any future videos. Before I got started into investing, I used to think that the only way that I could invest was by using my 401k with my employer, or by having a lot of money sitting around just to buy stocks that I wanted to buy. I didn't have $2,000 to invest into Amazon, but I knew I wanted to invest in it. Yes, you probably thought like I did, you could just invest into an index fund where you could just have a little portion of your money going to Amazon, but I wanted to have a stock portfolio that I could control myself. With the help of recent mobile apps and brokers, investing has never been easier. Now you can buy any stock that you want for as little as $1. And the way to do this is by buying fractional shares. So in this video, I'll go over what fractional shares are they even worth it, where can you buy some, and whether or not they pay out dividends. So first, let's kick things off with what exactly is a fractional share. So imagine that you live in New York City and you're hungry, and you're in the mood for some pizza, but you don't got that much money to buy a whole pie. You know you want some pizza, so you decide to buy pizza by the slice. This is the core concept of investing into fractional shares. But at the making of this video, Tesla is trading around $2,000, but you don't have to have $2,000 to buy a share of Tesla. But what you do have is $500. So in this instance, you can use the whole $500 to buy 25% of a share of Tesla. But depending on when you watch this video, Tesla is going to have a stock split, meaning that more shares will be available so more people can invest. But either way, the concept is exactly the same. When your money is on a diet, you buy a slice. So this brings me on to my next point. Is it exactly worth it to buy fractional shares? And the short answer is yes. Yes, it is. Here, let me tell you why. Fractional shares are a great way to start investing, especially if you don't have that much money to invest. By owning fractional shares, you can buy a larger variety of stocks and add diversity to your portfolio. So imagine owning an index fund ETF like VOO. An ETF is an exchange-traded fund, and this type of investment is traded in the stock market like a regular stock. But this fund usually consists of a bunch of different types of stocks. So hopefully that made some sense. As for VOO, this ETF consists of 500 of the largest companies inside of the USA. And at the making of this video, this ETF costs around $315. The thing about ETFs is that whatever stock that the fund is invested in, it usually have different percentages of its holdings. So for instance, VOO roughly has around 28% of all of its holdings in only 10 companies. Just to name a few, this would include Apple, Microsoft, Amazon, Alphabet, and Facebook. So imagine yourself going to Krispy Kreme. You can get a dozen of the original glazed donuts as if you were going 100% in one stock. On the other hand, if you were going to get a variety pack where you can get all different types of donuts, you can get a chocolate glazed donut, bear claws, cinnamon twist, and even Bulgarian cream. I kind of want to have donuts now. So instead of having all of your taste buds on one type of donut, you can taste them all. From an investing standpoint, this is much better to diversify your portfolio to limit your risk if any of these stocks decide to plummet. Imagine having a stock portfolio of 10 shares. If one of these companies were to drop by 30%, the other 9 can pick up the slack of that stock. Now this brings me to another reason of why I think it's worth it to invest into fractional shares. It does not matter if your portfolio is $100 or $100,000. If you were to own fractional shares, you can have 100% of your money invested. Meaning that instead of waiting to have enough money to buy a particular share of a company, you can invest 100% of your money into whatever company that you want. For instance, if Apple is trading around $500 and you have $1,250 to invest, you can technically get 2.5 shares of Apple. So instead of just getting 2 shares of Apple and waiting until you have enough money to get an additional share, you can have 100% of your money invested into Apple. Now this brings me on to my next point. How much money can you actually make? This is an important question because that's pretty much the whole point of investing. So since you now know that a fractional share is a small percentage of an individual stock or ETF, whatever gain that stock has will reflect your fractional share. So let me give you an example. At the making of this video, a share of Apple is around $500. If this stock does go up to $550, that is about a 10% gain. But if you just had $1 invested into Apple, at a 10% gain on $1, that's only about a dime. I know that this sounds very little, but that's what it is when you own fractional shares. You get fractional gains. Now, this leads me on to my next topic. Where can you buy fractional shares? There are plenty of stockbrokers that offer fractional share nowadays. Some of these even have no fees and are easily accessible from your phone. Ever since the rise of free investment apps like M1 Finance or Robinhood, investing has never been so much easier. So here's a list of a few investment brokers that offer fractional shares. Interactive Brokers, Fidelity, Charles Schwab, Robinhood, M1 Finance, Stash, and Acorns. One thing to keep in mind before deciding which broker or investment app that you want to go with is decide whether or not they have any account minimums that you need before you can invest. For instance, one of the apps that I personally use is M1 Finance. If you wanted to open an account with them, you would need a minimum of $100 to deposit. On the other hand, if you want to invest with Fidelity, which is one of the OG investment brokers, you can download their mobile app and you can invest as little as $1 per trade with no account minimums or fees. Depending on your account size and how much you want to invest, fees can really eat up a lot of your portfolio. Let's keep things moving with the next topic. Does fractional shares pay dividends? Whenever you buy fractional shares of whatever company that you want to buy, just like owning a full share of a company, you will receive dividends if that company does decide to pay them out. This can be very important if you want to get your feet wet with dividend investing. So in a nutshell, what dividends are is a portion of a company's earnings that is paid back to investors at certain periods throughout the year. This can be either monthly, quarterly, or annually. So there are a few ways that you can receive dividends. You can get paid out in cash or in the form of more stock, which is called a dividend reinvestment. So let me give you guys another example. I know you guys love examples, so imagine that you have a goose that lays golden eggs. The company that you own is the goose and the golden eggs is the dividend. As long as you have that goose, you will continue to get golden eggs, unless that goose dies. The thing about companies is that they do die and they do go bankrupt. But if you're going to invest into a company that pays dividends, most of the time, they are pretty well established companies. But since most dividend paying companies only pay back a small percentage of the shares that you do own, the dividend payment that you will receive if you own only $1 of a company would be very minuscule. Alright, back to the example board. Let's just say that you own $100 of Coca-Cola. The current dividend yield for this company is around 3.5%, meaning that you can expect a return of 3.5% without doing anything, whether the stock goes up or down. If you own only $1 of Coca-Cola, then you would essentially just get 3 cents per year. But in most cases, I really don't think many individuals would just buy a dollar share of a company, just due to the fact that the more companies that you do buy, the more that you have to actively manage them. Another route that you can do is by buying a bunch of different types of ETFs. If you want to invest with tech, then go with VTI. Or you want to invest into disruptive innovation like Tesla, then go with ARK. This makes investing so much easier rather than actively managing 100 stocks. But if you have the time, by all means, go for it. Now I'm gonna turn it over to you. Which of the brokers from today's video do you want to try first? Do you want to go ahead with the phone apps such as M1 Finance, or go with a traditional broker like Fidelity? Or you may have your own broker that offers fractional shares. Let me know in the comments below right now. Alright guys, if you want to hang out with me some more, check out my videos over here.